Alright, so this is going to be a video to talk about your taxes, and the level of what I want to do this at is fairly low. It's enough that if you were, say, filling out your taxes using the short form, or that you were doing your taxes online, that you could manage your way through doing the taxes, okay? So first thing I'm going to talk about is your gross income. That's going to be earnings per year, and that's going to include any kind of interest from savings. Okay, that's the main thing, is you're going to have interest from savings. If you kind of do some other kind of investments and you make money off of those investments, then you would have to include that in your gross income. But most people, that's going to be savings. For some students, depending on the nature of it, some sort of scholarships for college, if it's used to pay for your rent and for your food and that kind of stuff, some kind of scholarships for college that pays for your living expenses, those would also be part of gross income. Okay, adjusted gross income is going to be your gross income, take out any taxable, non-taxable part. So usually it's subtract out any kind of retirement that you do, and I'm going to put IRA for abbreviation. Okay, individual retirement account. So any kind of money you put away for retirement, not Social Security, so personal retirement accounts, it will be taken out. There are other things you can take off here at this stage, but that's mainly what most people are going to have, is that they have put away money pre-taxes for retirement. Okay, that does not include a Roth IRA. Roth IRA is different. It comes out after taxes, and you can talk to a financial investor to talk about the advantages of doing a Roth IRA or not. Okay, and then exemptions and deductions are going to be if you take the standard deductions. Okay, and standard deductions, these are going to be what everybody could take, or if you're going to itemize. Okay, so or itemize, and if you itemize them, you know that's going to happen when you actually have some things which are tax deductible. Student loans, if you have enough student loans, the interest you paid on the student loans can be applied. A home mortgage, you have to pay interest on the mortgage, you have to pay taxes on the house. Those things potentially are things that you can use to do as your exemptions and deductions. Okay. Now, for me, when I do examples, I'm always going to do exemptions and deductions together. Watch out in the book. They may do exemptions separate from deductions, so you would add those together. Okay. And then finally, what we're going to do is we will calculate your taxable income. And your taxable income, when I'll go through a little bit of a statement, is here's how much you have to pay taxes on. Okay. And the goal of taxable income is to get your taxable income down fairly low so you don't have to pay as many taxes. And in the end, when you go do your taxes, you're able to go through the process and see if you owe the government money at the end of the year, or if they owe you and you get a check. Okay. One thing I want to put in as a side note here is the filing status. Filing status does make a difference, and so you can, and filing status, you actually have to do that on your I-9 form, because it makes a difference on how much money they take out. And so it could be 0, 1, 2 would be the deductions that you could take. Also, filing status makes if you're married or married filing separately. Okay, those are the kinds of things where if you get to that stage and you're doing it and you're trying to debate the advantage of filing joint maritally or not filing separately, you may want to talk to a tax consultant, because that's when it gets a little trickier, because you have to do both calculations and see which one is better. Okay. So one thing I want to do before I go into an example is I want to outline kind of what you do, so you kind of understand all the pieces to it. So first thing you're going to do, okay, and this may make your examples a lot easier, is you're going to calculate the gross income. Okay, and it's not going to be much, okay, but you just want to remind yourself to add interest from savings. Okay, so that's the thing you want to remind yourself, that you're adding into interest from the savings. That's the only thing that makes a difference on the gross income. Then you're going to go through and you're going to calculate your adjusted gross income. Okay. Sometimes they write this as AGI, adjusted gross income. I'm going to abbreviate it as just adjusted gross. And what you're going to do is you can take your gross, and then you're going to minus off any kind of IRA, any kind of retirement investment. Okay. There are other things I said already beyond that, but you're just going to be thinking about minusing off the retirement. Okay. It might be an IRA, it might not be an IRA. Okay. And that will get you adjusted gross income. Okay. And then the third thing you're going to do is you're going to find your taxable income. And your taxable income, and here's where students get a little bit in trouble on this, okay? And I'm going to go off just for just a second because it helps you to understand. Eventually with this, you understand you have to add, you have to subtract, you have to add and subtract. You know that that's the kind of math you're doing in this one. But you got to pay attention to what the items are and what you're doing with it, the logic behind them, okay? So the logic of up here when we talk about the savings is that this is money that you've earned in that interest, okay? So yes, it seems weird, but there's a certain cutoff where you earn a lot more interest off of your savings. That's income they consider as part of your income, okay? This one here, this is something that's considered tax-free in the process, so you can subtract off the money that you go to your retirement tax-free. So if you understand that that's tax-free, you're going to subtract it off from the gross to get your adjusted gross, okay? And then the third one here, when you do adjustable, your taxable income, you're going to take your adjusted gross income, AGI, and you're going to subtract off your exemptions, and you're going to subtract off your deductions, or the exemptions and deductions together, okay? So that's what the process is, and that's a very simple way to kind of write it out, okay? Let's do an example. So here's a very simple example. If you know enough from what I explained so far and can do this simple example, you can work your way, though you'll find some things are a little weird when you do it, you can work your way on an online software system to take care of your own taxes, okay? So in this case, for Joe, I'm first going to do is I'm going to figure out his gross income, okay? So in this case, Joe has earned this $63,500, and then he had $500 in interest. So I'm going to take the $63,500 and add on the $500 of interest, and this makes my life easy. That's $64,000. That's his gross income. Don't forget to do that. Okay, that interest is part of income. Okay, and then he had exemptions and deductions of $8,400. Okay, and he contributed to $12,350 to his retirement fund. Now, I purposely did this in ordering when I did this problem. That if I'm going to do the adjusted gross income, or AGI, all right, I'm going to do gross minus the retirement. So 64,000 minus what he contributed to his retirement fund, which is the 12,350. So it's what I contributed to my retirement fund. I can take off my adjusted gross income, and that gets me to be 51,650. Okay, and then when I get my taxable income, then I will take my adjusted gross income and subtract off my deductions and exemptions. Now, what I've done deductions and exemptions together here. You may find problems in the textbook where they've done them separate, but I've just added the two together, the $8,400 that I'm going to take off. And when I do that, I get 43,250. And that's my final answer. So just be careful here too at the end. Make sure that you pay attention to the overall process, that you don't just try to randomly add and subtract numbers, that you kind of understand that interest, okay, is part of your gross income, that retirement funds are pre-tax dollars, so you get to take that off first before you go to have any taxes. So your adjusted gross income is this, and that it's exemptions, deductions together added together, they're going to come off your taxable income. Okay, so if you kind of understand how that works, everything will be really great. But if you just don't take the time to think about what these terms are and where they place in on here, then you will get in the bad habit of just adding and subtracting things at random, which is not the best way to do this.